Okay, this is the Orderflows Price Rejector, how to determine when the market is rejecting price and how to profit from it. This is the second part of my look at various charts, markets, and time frames. In this video, I'll be talking about emini 10 range charts, the ES 10 range charts. My name is Michael Valtos. I'm the founder and trader of Orderflows.com. First, a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Again, what is the price rejector? It's an indicator based on order flow analysis to determine when the last buyer has bought and the last seller has sold. Okay, the price rejector uses order flow analysis to identify low-risk trade entries at potential turning points in the market. Highs, lows, swing lows. What you want to do is you want to be able to pick when the market's turning rather than after the market's moving. If you can find an area where the market is, where the prices are being rejected, that's where your highs and lows are going to be made. The price rejector runs on the NinjaTrader software platform. It's easy to use, just import into NinjaTrader and trade. It's designed for an order flow footprint chart that's now programmed to work on a normal bar chart. That's why I'm showing you how it looks on a normal bar chart in these videos. No PhD is needed, no live training room needed. While it's not rocket science, there is a science to it. Okay, so this is an emini ES 10 range chart. Again, I'm going to go through the first few weeks of May. And that's where my data is in there. So you have May 2nd, right after the cash open. Sorry, right before the cash open, rather. You have this bar here. You got to sell, and market moved lower. Here you got another sell, market moved lower. Those were the only indication. Sorry, only trades for that day. Okay, so let's move on to the next day. This is the 3rd, 5-3 here, May 3rd. Got a buy signal here. It didn't work out. It came down, got through your stop. Not every trade works out. Here, same thing. Here, it's trying to pick its low. It's looking for its low. And you did get a little bit of move up, so hopefully if you took a couple of early losses, you could have made some back. This chart, I don't think I have the normal index hours, so this is something that happened after the market closed. I'm not going to take credit for it. I'm really only looking during the main trading session. Here you got a couple of buys, and the market moved up. Let's take a look here. Okay, it'd be nice if I could screen wouldn't freeze. And 43 3/4, 44. Trade up to 47, 47 and a half. Here's another buy. You kind of got green, red before coming down, but it's slightly going down. I think this trade would have given you something. This one, yeah, maybe a scratch. I'm not going to say that it was the result would have been a big winner, but at best, I think you could have got a little bit something out of it, maybe just a scratch. The next day, 5-5. This signal didn't work out. This next one did. It was looking for its swing, its intermediate low, and it's going from the 49 level up to the 55 level. You could have got at least 5 points out of that. Okay, this is the 6th. This is the non-farm payroll number. Nothing. Oh, there's one right on the close, but sorry, that's not the close. That's 10. My charts ended early. I stopped trading early that day. This is the next day, or Monday rather. You got a couple sell signals here around this 50, 58-ish area, getting short around 56. Trades down to the below 50. Get a buy signal and trades back up to 56. If you could just do this, it would be beautiful if every day is 5 points down, 5 points up. Unfortunately, not every day is like that. That was the 9th. So here's the 10th. Yeah, my data ended early on the 10th. The 11th, Here you're getting a sell signal. This is probably about 9:45, and it's it's at the 75-ish area, and it trades right down to the 65 area where you get a buy signal. This one didn't work out. This one kind of went sideways on you. Okay, that's the 12th. Sorry, that's the 11th. The next day is the 12th. You get a sell signal here. It comes off a little buy signal before failing. Here's a buy signal that failed. Sell signal didn't work out. The buy signal right on the cash close. I'm definitely not looking to trade on the cash close. The 13th, Friday the 13th. Well, this was in the overnight session. I'd love to say, yeah, you take it, but not everybody trades the overnight session. So, I just happen to have the data on my chart there. Okay, so you're in the cash session here. It starts to pop up before it turns around here. You get a little bit better move before it turns around on you. Again, part of being a trader is recognizing trade's not working out and getting out with what you can. In this case, we go up and then you immediately turn around and engulf it. Are you going to wait for it to come out and stop you out, or are you going to be looking to get out somewhere in here at a smaller loss rather than taking the full loss? If you can't recognize that the trade is not working out when you got this red, then you should spend more time practicing your trading. In this case, it's giving you a buy signal here. You got the red candle, then you got the green candle, then you got the red candle down again. It's telling you be prepared to get out when you can with, preferably a small profit. What day is this? This is the 16th. One signal didn't work out. Some people I know like to reverse. I'm not a reversal guy that's going to reverse my position. Here's a couple buys. Boom, boom. Just a little bit move up. Again, a nice little move up here. We're kind of hanging around the level before we start to sell off. This one didn't work out. This is the 17th. What day is this? This is the 18th. Here it goes up, up, up. 1, 2. This third bar, it starts to push up, starts to turn around. When you're seeing things like this in the market, this is a 10 range chart. Not a Renko chart. So one bar is 10. Is essentially 10 range. And but when you're seeing things like this, it's telling you, hey, the move isn't sustaining itself. If this is going to be a move higher, you're expecting to see green, not all of a sudden red, and the market's giving you something. It's telling you, hey, get out while you can. Okay, this one is sort of pre-market in the morning. This is the 19th. And there was nothing on that day. I'll see if I can show another emini chart. Okay, so let's look at this is emini. This is a different type of chart. This is the Uni-renko chart. And again, we'll start on the 5th. The 5th. The 2nd of May. Here you get a sell signal, followed by a buy signal, followed by a sell signal, followed by a buy signal. So you're literally going down towards, from the high down to the low, back up to a new high, to a swing high, back up again. If it was, if I was honest, if I didn't have any scruples, I'd just show this chart with the thing. But I want to go through a lot of charts and show you how it's going to look over a period of time. Here was a buy signal. Yeah, it didn't really work out. I think it would have stopped me out. Here was a sell signal. Didn't work out. Stopped me out. Not every trade worked. This day was not a good day. You had a day where the day before everything happened like clockwork. Boom, 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 boom. This day was a bit more of a struggle. The following day, unfortunately, that's how the market is. This signal I probably wouldn't have taken. It's too close to the open. But this one definitely, again, you're trading around the 52 level. Come right down to this area in here where you get a buy signal and rallies back up. That's this is was at 8 points. This is 4 points. And then here you have this another move from the 42 up to the 47 level. So it's again, I said the previous day, if you're just looking at one day here, everything didn't really work out. It started to, then it failed, started to, then failed. Here, never really took off. This day, every signal I will say was a failure. But then, it just happens to be sandwiched around 2 days where pretty much everything worked out here. Boom, boom, boom. It's not an indicator that's going to give you signals left and right. Things have to line up in the market with the order flow. So let's look, that's the 4th. Let's look at the next day, the 5th. 5th of May. Here you get a sell signal. Then boom, another sell signal. Here, a buy signal. So, you get something out of this move. You get something out of this move. This one I wouldn't take. It's right on the close. And, it's about, having, trading is about knowing when to take profits, knowing when to get out of positions when they're not working out. In this case, you had that one day where every trade failed. Now then you're following up with 2 days where pretty much every trade was a winner. And so we'll go on to the next day, the 6th. This is non-farm payroll day. I don't have the complete data, but there was one signal here, 8:20 before the cash opened, that failed. Okay, then on Monday, this one is just after basically my chart start, so I definitely would not have taken that trade, even though it was a winner. This one would stop me out. This one, depending on the time, I probably would have taken. This one started to work and it failed. So this one was a winner. Again, it's going into the close. This day, the 10th, it was for me an early day, but didn't work out. Didn't work out. The 11th, let's take a look. The 11th, a couple signals here. This one did work out. 74 up to the 78 area. Here, this one kind of started out okay, promising, but then it's giving you a chance to get out. You don't have to wait till it comes down here. You have to be able to recognize that the trade is not working out. You're not getting paid on the trade. Okay, so let's go on to the next day here, the 12th. Scroll through until we get some signals. This one, didn't really work out, but it's giving you a chance to get out at a small loss, or even a profit. I probably would just be happy with a small loss. I don't need it to come all the way down in here to stop me out. You're getting along, but you're seeing the bars, right? You're seeing it's not going in your favor, and you get bars that are closing negatively. Now, do you need it to come all the way down here to stop you out? No, you don't. The market's giving you a chance at saying, hey, get out. It's not working out. Here was a sell. It started to work out, and it started to reverse on you. Again, you're getting short. You expect to see more red candles, not all of a sudden stop and get green, green, green. This one didn't work out. This one did. Let's see the next day, Friday the 13th. Let's scroll through. So here's a sell signal. This one worked out. Came down here to this area where you're going sideways. You get the buy signal. Yeah, this one didn't work out, but it's giving you a chance to get out at a small loss rather than a full stop out. Here you're getting short. Sell signal. It kind of struggled before turning the way you'd expect it to. This is a buy signal. Again, it didn't work out immediately. Stopped you out. And that was it for that day. Let's look the 16th, which is a Monday. A couple sell signals didn't work out. This is the 17th, sell signal. Okay, it's one of those things, right? Are you going to let it come back up here and tick you out before selling off? Honestly, you're getting into this trade, you get green, green. You should be getting out somewhere in here, at around a scratch. Here's a green, a buy signal. Boom, a little move up, then you get a sell signal and a nice move down. Here's one, a nice buy signal, went up to get to the sell signal. This one didn't really work out. This one, there was another signal here. It didn't pan out. It started to, but then it's starting to reverse. You could take a smaller loss rather than let it come all the way down here and stop you out. Here's a buy signal. It's 41 up to 46. It's 5 quick points. Then you get a sell signal back down to that same level, then another buy signal. And then down here, you get a nice buy signal right at the low, right off the low of the day. It's finally found its low, and it's moving from 32 up to the 40s. What day that was, the 18th.
And the 19th, you get a buy signal here. It goes up from 25 up to 30. Get another buy signal here, around the 24 area up to the 28. I think that's all the data I got. Okay, well, there was a late sell signal here, and then it just sort of came off a bit. But it's giving you nice moves here, nice moves here. There's times where it doesn't work. Obviously, you saw these signals that failed. Here this one failed, this one failed. I show you the winners with the losers. This day was this day was a tough day. The 16th. It was a trending market, and on a trending market, if you're trying to pick a high or a low, you can't, because the market is just trending. This was a day, this 13th, you got some decent signals. You get a few points here, a few points here, and a failure there. So I try to show you different charts and different time frames. I mean, I think it's something you could add to your trading to help give you good trades. I mean, that's what you want. You want good trades. And when you're wrong, you want to know fairly quickly. And again, you don't, if you're trading with stops, you don't have to let the market go directly to your stop to stop you out. You can get out a little bit early with a smaller loss rather than taking the full loss. I mean, that's what the great traders do. They recognize when the trade's not going in their favor and they're getting out. This next chart, I'm going to throw up a few more charts. The minis. This is a 3-range chart. I don't use a 3-range chart. One of my users uses a 3-range chart, and he asked me to take a look at it. And so I want to show it to you as well. This is again May 2nd, starting on May 2nd. And if you're trading a 3-range chart, you're going to get a lot of signals no matter what sort of indicator you're using. So I don't think you can necessarily use as tight. I mean, I don't know. You're trading a short term, right? And the thing is, you're going to get a lot of fluctuations in price. I said I don't trade on a 3-range chart. Some people do. Some people like the action. For me, it moves a little too quickly. I prefer things on a slower pace. So just real quick. Again, we'll run through a bunch of charts here. This signal here, I would have taken. It's right on the open of my charts at 7 in the morning. Then I have my sort of what I call my index hours, which is 7 in the morning until 4, till the close. I choose 7 because it does trade during. It does pick up around 7 when when the New York guys get in. Obviously, the cash opens at 8:30. So here you're getting sell signal, buy signal, sell signal, buy, sell, buy. It's just for me, honestly, it's a little too fast for my taste. Even though there's a lot of signals that are working, you can get sometimes. I hate to use the term noise, because what noise is in the market is the market facilitating trade. And for me, personally, I find the 3-range a little bit too tight for my own taste. This one didn't work out. This one kind of started, then it turned around on you pretty quick. The 3-range chart is going to move very fast. Here, this one sort of worked out. The next day, the 3rd, let's get into that day here. Whoops, sort of drew past it. Let me just make this chart a little bit bigger here. So, sell, buy, fail. This one kind of worked out and failed. You got, trading on a 3-range chart, you got to be trading very, very fast. Okay, so where am I here? Okay, so here's a sell signal. Didn't work out. It kind of did. It then reversed. It's a 3-range chart, so you're gonna have very short trades. I don't know. I don't trade this chart again, but I'm showing it there because honestly, you're getting a lot of trades. And I'm always curious to see, when you get a barrage of trades, buy, sell, buy, 2 out of the 3 work. Here's one that failed. Here's one that successful. Here's one that failed. Successful. This one failed. This one, yeah. This one, yes. This one, yes. This one, no. This one, yes. One of the reasons why I don't, again, this is a 3-range chart. When you're using a short time frame chart, sometimes it's going to take the market a while to find that low or find that high. Like here, you got low, low, low. I mean, you did react off of each time, but it's still searching for that low. Just as, the high here, yeah, well, this one worked. This one didn't. Here's a nice high. This one didn't work out. This one, it's still looking for that short-term low. You're getting some nice little spikes up, but again, you got to be super fast to react to these things. Maybe if you're into automation, you might want to look at a 3-range chart. Honestly, I never thought of it until one of my users was asking about it. So I mean, that's how a 3-range chart looks. The last chart I'm going to go through is just a 1-minute chart. Just real quick. I'm trying to show a bunch of charts on this presentation. I prefer a 1-minute chart over a 3-range chart, just because the 3-range chart can happen. Basically one trade and you get a whole move. And a minute chart, things are a little bit more spread out. Again, I don't trade a minute chart. I trade a 5-range and I trade a 10-range chart. But if I had to choose between a 3-range and a minute chart, I'd choose the 1-minute chart. So let's go through a few days here. This is the 5th of May, May 2nd. Just after 7, you get a little buy here. With a minute chart, you can. I think it's a little easier to manage your trades because you can also factor in time as well. On range charts, you can't necessarily factor in time unless you're watching your execution time to how long you've been in the trade. But if you're trading a minute chart, you're not going to be holding it, 30 minutes. You'll be holding, if it's not in your favor, in the first couple minutes, chances are it's not going to be in your favor. So here's a buy, immediately shot right up. Here's a sell. It's a little bit harder to see, just because I have it as, the hash and it's a red candle. Should probably make a change in that. So you get the little sell-off here. This one fails. It starts to go lower, but doesn't. It just sort of turns on you. That's that. Here's a nice one just after the cash open. You could, this, again, where are you going to have your stop? You're going to have your stop right at this level, or a tick, usually a tick or two below it. If you're using it right at this level, you'll come right down to your stop after you get in and then shoot up. Anything, nothing. Here was a buy. It didn't really go anywhere, and probably would have just stopped you out. Oh, sorry, here's a buy that I missed. It sort of went nowhere after you got in. This one, you don't have to wait till it comes down here to your stop price. You can just see it's just hanging around your entry price for how many minutes. That's usually a good sign to get out. See, this buy didn't work out. This buy did. It shot up here before just sort of hanging around and making that second run up. Here's a couple sells. Let me just go in here. It's, the market came off of, what is that, about a point, 2 points. It's, again, you're trading a minute chart, so you're not going to be holding it for, this is 11:25, 11:24. You're not going to be holding it until 12 o'clock. This was a sell, which sort of went sideways on you. Here was a nice buy that shot up pretty quick. Here's another buy that worked out nicely. This is a sell, didn't really progress very much. It sold off initially, but then sort of came right back. This was a buy that just sort of went sideways, and you got red bar, red bar, red bar. And that's right on the cash close anyway. Okay, so that's that day. Let me just find another day around. I don't know where to stop. What day is this? Okay, I'll just choose this day. This is the 9th of May. Just after the cash open here, you got a couple sells. It started to go there, but then it turned around, and again, you're getting short. It starts to work out, and then you're getting green. Are you going to let it come up here and stop you out, or are you going to read this and say, hey, it's not working out? What you want to see is a move like this, or it's just going down. You get the sell and it goes down. Not where you get the sell and it just goes down 1 bar, then 2 bars up. So here's a nice sell, and here's a nice sell. Here's a buy that kind of worked out a bit before it sort of fell over. But again, it's a minute chart. 1, 2, 3, 4, 5, 6, 7. You know, you're trading a minute chart. You have a very short-term time frame. Oops, what was that? Sorry, I think I skipped ahead a lot. Yeah, okay, that's what it was. So, you know, this one kind of went sideways and, you know, went up. I think you could have got a couple ticks out of that. The sell sort of went sideways. Never really went in your favor. But you could cut your loss at a small loss. Nothing there. This one didn't work out. This one immediately failed. This one, started to shoot up, then you got a sell signal. The sell signal worked out, the buy didn't. Time is at 11 here. Fail, fail. You know, this one sort of shot up, then went sideways. Oh, sorry, first you had the first signal here. So you're getting a better entry than in this bar. So you're getting it in that 54.5. You know, like I said, it's a 1 minute chart, so you know your targets and your stops are going to be pretty tight. You know, this one again, well, there was this buy down here, which, you know, there's one bar probably would have stopped you out, but it didn't really go anywhere. This one again sideways. You know, this one, again, you know, where you're putting your stop, you know, how close is it? If it's extremely close, you're going to get stopped out. If you're giving it a tick or two, maybe not. And, you know, it depends on your trading style. Here, you get a pop up from 55 to 6.5. I mean, it depends on how many points you're looking to get out of a move. This is 3 o'clock on the cash close. Probably wouldn't know. This one didn't work out. Sort of once, you know, you'd be buying it here, and then it's just can't take out this previous high. That's not a good sign. You know, it's a sign to get out, if anything. So you could, you know, you probably would have just scratched this trade. This one I probably wouldn't take. That's on the cash close. Just go ahead and find another day here real quick. What day is this? Well, this is the 11th. So right after the cash open, you got to sell, and then a buy. You know, this one sort of invalidates. You'd be getting short here, but then you get a buy, so you can cover it. You know, I don't need to take a small loss. Well, you'd be short on this one, even though you got this other sell here. You'd already been short. Anything else? Nothing there. Here's a nice, well, I'll say a nice one, but you're getting the signal right at this high. You know, and it's a nice quick move. You know, from the 78 level down to the 75 level pretty quick. That's quick. 4 points, 3 points. You know, this one didn't work out. You know, it just went sideways on you, sideways to higher. So you could have got something out of it, a couple ticks. I'm not saying you're going to get, you know, buy here and sell up here. You'd be happy, you know, just to get a few 2.5 up to 5 probably. This one failed. That's that one. Then these sells didn't really work out. Probably get stopped out right there. This one, you know, it popped up. Again, how many, you know, what are you trying to get out of the trade? You know, there's some people that are happy to get 3 or 4 ticks, and there's people that want to get, you know, 2 points, which is, you know, 8 ticks. I mean, here it looked like it was going to take off, but then you run into this red candle and this red candle. So, you know, if you're long in here, you're getting this sort of a bearish sign, and you get this here. You know, you're looking to get maybe a tick or, you know, a tick or 2 out of it when it gets down here, or if you're trailing your stop, you know, maybe your stop's up here. Who knows? Then you get another buy here. You know, you'd be buying it at this 70.5. You know, it just sort of works its way up. 71.5 times it. Again, I'm not saying you'll be getting out up here because I know it's a minute chart, so I'm not going to get into a trade and get out, a half hour later on a minute chart. Realistically, when you're trading a minute chart, you're getting out pretty quick. I don't know what just happened there. My chart disappeared. But anyway, just to sort of recap, this price rejector will work on any chart. It works on the NinjaTrader trading platform, but it works on, bar charts, Renko charts, order flow charts. I mean, people that have the order flow traders that are in the trading room, they see it every day working in the trading room. So that's why I'm not showing it here, because, for people that have the Orderflows trader, they see it and are able to follow along in the trading room. And it'll work on just about any time frame. So, if it's something that you think you're interested in, visit the website, www.orderflows.com, or, there's a small website, pricerejector.com, that I have it on also. But, in the main site, orderflows.com, you'll see a lot more about the indicator there. So thanks for watching, everyone. Bye-bye.